Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, March 11th. It's 6:45 as I'm starting the video. Taking a quick look at futures, we've got ES up 0.7%, small caps up about 0.5%, and NQ, NASDAQ futures up boldly 1.8%. On the macro scene today, we've got unemployment claims at 8:30, and we've got a 30-year bond auction at 1 p.m. Yesterday, there was a 10-year auction with a lot of issuance that I was watching pretty closely. Although the auction did not go off without a hitch. It wasn't the greatest in the world, but yields did not appreciably move, maybe even drifted lower a little bit. So that gave some, at least some slight tailwinds to these high growth names that have been in the crosshairs lately. And so the Qs stabilized a little bit yesterday. Didn't make a lot of progress. The technology was flat, but they didn't go down. So, and now with being up 1.8% in the pre-market, we'll have to see how today rolls out. So keep that bond auction in the background today as you're trading. Just know that it's happening at 1 o'clock, and you may want to keep TLT up on your matrix or the yields, depending on how you want to look at it, and see if there's any kind of reaction on yields or TLT as that auction goes off. If there's some kind of big yield spike, I'm sure it'll work its way into the Qs. So let's get started, see what happened yesterday, see what we can get a read on how we want to position and the key levels for this morning. SPY daily made progress, broke this downtrend line. You can see that we've been watching this PPO zone right here as PPO comes down, tags the zero line, and is now curling up. That's exactly what you want to see as a bull. With this PPO reset, RSI finding support here at trend and staying above 50. So really right now in the pre-market, SPY is trading around 392.50, which is right up here near the prior highs. So, you know, if it can take that out, then we're in blue sky country, and I would assume off to the races. Let's look at the 2-hour chart. You can see that I've got a band of resistance here right at 392.50. So we're still 3.5 hours ahead of the New York Open. But let's just say price holds in this area. We'll have that gap below that we've always got to be cognizant of at the open. But if price were to gap and go, you know, open near 392.50 and then pop it, you can set your line in the sand right at that 392.50 level, and then just stay long north of that. And if we were to come back and then go back into the gap, then of course the fade would be on to fill the opening gap back to yesterday's close down at 389.60. So I will pencil in this gap once we open, and then that'll be the area of focus, at least on the downside, if there were to be any kind of fade. But you know, SPY and IWM have been strong as this rotation into cyclicals and value proceeds, and money is coming out of the NASDAQ. So anyways, the one thing I was thinking yesterday was, you know what? Price has still not taken out this breakdown candle, but if price can pop it today, then that will be a big hurdle. And then we've got this last vestige of resistance here at 392.50 that price needs to take out. And I have it a little different here on the 30. I've got it at 392, but still basically the same level on your 30-minute chart. And I've got the gap penciled in from yesterday. And then, of course, today there'll be another gap there. Qs went up and tagged the 50 and was rejected, came back down. That's a level that's in focus for quite a number of reasons. If price cannot recapture the 50 and the declining 20, which is the blue line, then the technical posture remains bearish. Now, that 1.8% pop that we're seeing in the pre-market, that brings price back up to 317.50, and that's where price is trading in the pre-market. So yet again, there'll be a gap below at the open, and price will be at resistance. If it can pop 317.50, then I would imagine there would be a path up to this the 618 and this 324 level, which is the top of this breakdown candle, and that would be a zone of resistance. Let's look at the 2-hour here. We can see it a little clearer. Here's the 50% fib right here at this 317.50 mark, so that's an area of resistance. If price can pop that, then I see it going up to 618, which is 322.50, and then most likely, if it gets that far, it's going to test this 324 at the top of this breakdown candle sequence. So that'll be a big hurdle for price to get through that 324. I wouldn't expect it today. I mean, going from 311 to 324 today, I kind of doubt it. I think a good accomplishment would be to simply put in a higher high, get above 317.50, and then hold it the rest of the day. And I think that would be a good result if you're bullish the Qs. Yesterday, we had that gap open, and then they faded it the rest of the day. If you caught it early, good for you. That was a great, entry to, short the high. Wasn't the easiest trade to make. I got in there pretty well. I don't know exactly what my entry was, but I got this candle on the down move, but from that first hour, from 10:30 on, it was more or less a kill zone if you're trying to actively trade it. Pure chop between 313 and say 311. It was just, back and forth all day. There was, just consolidating, refused to take that leg lower. So that was a frustrating afternoon if you were, looking for any kind of follow through there. So, today, like we just talked about, we're going to be up in this 317.50 area, and then we've got the overhead resistances as shown. I think 324 is really your big level, because that's where notice support, resistance, resistance until it can take out 324. The bulls would be stopped at that point, and then this could be considered, a healthy bounce up to the 618 area. But then if it rolls over here, that's your objective shorting area. And when I say objective short, you're shorting against a known level. That doesn't mean it's going to work. That just means it's objective, that you had this bounce. Now you're into the teeth of resistance. And if price can prove you wrong, you take your paper cut and then you get bullish. If it rejects at 324, then you've got, an excellent entry for what would likely be, a move back down into 317.50 and possibly all the way back down into these areas here. IWM is strong, gap up, and it held. We're in the pre-market. I took note that we're in the 229 area, so we would be above this 227.50. And remember, we had marked this $10 range as a big consolidation / trading range. So in my mind, if it pops 227.50 and can hold it, I think 237.50 is your measured move. So if you got any kind of a pullback this morning back into 226 for sure, but 227.50, then those would be excellent places to get long. And if price can pop 230, that would certainly be a place where you could get long with a stop just below, and then look for your 237.50 measured move target. Now yesterday you can see that after the gap open, it just oscillated all day. So they're really, unless you were long into the close on Tuesday, you probably wouldn't have, that would have been a hard trade to grab on that gap up open. Certainly possible. On the 5-minute chart, you could see places where you could have gotten in. But if you hesitated at all, then the rest of the day was just consolidation, and you're just hoping for a move higher. Let's move on to FANG, FATMAAN trades. Facebook had a reach above that failed, and then down into this consolidation range with the Qs being up this morning pre-market. Price will break above this 266 resistance level. Then it's all about holding it. If price can hold that 266, you've got a long entry with a stop just below. And then if it can clear 268, that would be even better, because it would take out these highs, and then you could move up your stop to just below and look for 272 and higher in the days ahead if the Qs are going to make a push. Apple weak again, opened higher, and then they faded it and then consolidated all day. I really think for Apple, it's got to clear this 120.50, and then it's got to clear 123, and then it's got to clear this downtrend resistance line. And really, to get going, it's gotta break above this 127. I think all these locations in here are overhead objectives and targets, but they're also resistance levels as well. And if you see price come in to this downtrend resistance, I think the onus is on the bulls. The bulls have to prove it. The bulls have to break above these resistance levels, because the preponderance of the evidence is a downtrend. Until the downtrend is taken out, it's still a downtrend, right? So Apple remains weak. Not to say it cannot rally from 121 up to 125. I mean, that's $4. If you trade from level to level and you want to be active, those are certainly long trades you can take on a tactical basis. But from a strategic basis, longer term, Apple's still in a downtrend. And there's no evidence at this point that a sustainable reversal is afoot. What would change my mind? Taking out the downtrend and taking out 127 would be, in my mind, the emerging stages of a sustainable trend reversal / breakout. And then I would be a lot more confident taking a long, say at 127, and looking for then 130, 132 to fill this gap, and 134. So those would be levels that I'd be looking at on the upside after a breakout. Tesla, big gap higher, reach up to 720 that we had as a resistance level. That resistance held, one quick tag, and then they faded it the rest of the day. I think for Tesla, the main level remains 670. If price can hold 670, the door is open for a move back up to 720. Above 720, it can find 770 at this thin little gap here. But below 670, the whole thing is suspect as a fake breakout with a bias to come back down in here to 620. And yeah, so in my mind, 670 is a clear line in the sand pivot point for Tesla. Microsoft, gap open right up to this level of resistance here at this prior high. I didn't have it marked in there. I should have. But right here, if you notice that and we're on your game, that was an objective level to short, and then they faded it the rest of the day. I got short on the break of 235, so that was a nice, little cash flow trade from 235. I think I closed it out at 233 or 232.50. Of course, with price up today, it's going to gap open higher. I think 235 is your pivot point today. I have it down here, but with the gap open higher, key off at 235. If it can break above and hold, I think you can be long with a target of 237. If it takes out 237, then you've got 238.40 at the bottom of the gap as your technical target. And of course, if 235 is rejected, then back towards 233. So choppy trading, but certainly there are objective levels to go long or short against for active traders. And I know I'm going to sound like a broken record, but the Free 50 Club delivered yesterday yet again. Fake breakout above 3,100, which was and is and remains a key pivot level. Fake breakout, they faded it. Break back below 3,100 was your short entry trigger, and you got a $70 unidirectional move down to 30.30, and then you got the reversal candle. So whether if you got short and whether you closed it out at the technical target of 3050, that's your free 50 club, or you held on for the low of the day towards 3030. That's just personal preference and, active trading expertise. But just from a technical target standpoint, once 3100 failed, then your target was 3050, and that was met yet again. Now this morning I took a quick look. We're back up towards 3100. That's going to be your pivot today, just like it was yesterday. If it can gap up, break above 3100 and hold it, then you can look for 3150 on a gap and go. But if it can't, then you've got a gap fill lower back to yesterday's close, right at 3057, and I wouldn't be surprised if it came all the way back to 3050. So again, these $50 levels have been working like a charm. Google, nothing day. Had a break above this 2050, and then they faded it, and then it kind of rallied. So that was, probably some tough trading. Certainly there, if you're active on smaller time frames, on your 5 or 10 minute chart. Once this 2050 did not hold, then that was your short entry, and then you got to move down in here to 2020. Netflix, another, this is all active trading stuff, and it was a matter of if you were focused on it, if you had some alarm set, if you were ready with your finger on the trigger. Gap open right into the teeth of resistance here at 517.50-ish, right here in this, red zone. You had 2 chances to sell it. And if you did, you got a nice fade back into 505. Now, I didn't get any of this, but I had 504 at this gap ready to go and never got the break below. So that held. So this morning, I did not look where it was in the pre-market. So as long as 504 holds, you can be long. If we gap open higher, just like on all the other charts, your opening range becomes your de facto stop. And if it, loses that range and comes back in to fill that opening gap, then, 504 will be your target. On longer time frames, we're still in a downtrend. If I were to go to, a daily chart, we've got to see some evidence of a sustained reversal before we can just camp out long. And, so I think the preponderance of the evidence is, fade these rallies, rally, fade, rally, fade, rally, fade. Traders are going to keep fading it until it doesn't work. And that will be the first sign, and it may come today, a gap higher that holds, that the bears can't fade, then that's a first baby step in a trend reversal when the bears lose power and can't, fade the opening. So keep that in mind. I would not be too overly ambitious to take duration longs on these technology names. By and large, they still remain weak and haven't shown evidence of any upside reversal that has any staying power. So just from a tactical standpoint, I'd be leaning towards, even if you don't want to short it, be leaning towards prove it to me. Bulls, prove it to me that you can sustain an up move, and then we can take it from there on longer term duration longs. But remember, with the daily time frame, QQQ, being in a bearish posture, that is the overarching umbrella on all these FATMAAN names, because the FATMAAN names are the Qs, right? These are all the components. So all the components taken together, looking at the QQQ daily chart, still is in a bearish posture. So until we see turnarounds on the 60-minute charts of these FATMAAN names, it's hard to get bullish on the Qs, because all your top components are still bearish. So I hope that helps a little bit. The action continues to be in the cyclicals and value. Even if technology puts in a little rally here, I think all that means is that value and cyclicals are going to keep advancing. And with the stimulus being passed and that stuff going out, I'd be betting on rates rising. And then again, once they start rising again, then that pressure on the high valuation names, softwares and the ARK fund and technology in general, will remain elevated. So while rates have not advanced in the past few days, they certainly haven't pulled back. So that would be something that would be notable if we dropped back into the 140s on the 10-year. That would be a tailwind for technology on falling rates. But I don't really see that happening. I think rates either hold in here or start grinding higher again as the stimulus starts to roll out. And remember, we've got a Fed meeting next week. Of course, Jay Powell will have comments on inflation and all that kind of stuff. And we had the CPI yesterday, which really didn't show, any concerning inflation. But it's next month when the base effects roll in, where that's when COVID happened. And so next month we should see where there's more dramatic inflation compared to last year. And then those kind of readings will proceed on through April, May, and June. Of course, that's when the economy went to zero. So as the calendar rolls forward, we're going to see much higher inflation compared to last year, because that's when the economy tanked. So the comparables will be dramatically different than they were this month compared to last year. So let's wrap it up there. If you're new to the channel, hit that subscribe button and alarm bell. You'll get notified of all my content. We'll really be glad to have you. Check out the show notes. You'll see links to the blog site and how to register for all my content. That way you'll get an email each and every time I publish, intraday market notes and stuff that never make it to the website. You'll get observations and thoughts from me as they occur during the day, and be glad to have you. Also, you'll get an invite link to the trading room, and we'd love to have you join all the other aspiring traders that are working hard to get better each and every day. So let's wrap it up here. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.